Hey everybody, Chris here. So with the recent pullback of Bitcoin and the entire crypto market just about, the question is, do you buy the Dogecoin dip or do you wait a little longer? We're going to talk about that in this video. Please be sure to subscribe to my channel. Hit that little notification bell too. You can be notified when new videos come out, as well as when we do live streams. And a lot of time on our live streams, we take a look at those heat maps, right? And we see where all those leverage positions are, both long and short. And we were eyeing a target for Bitcoin, particularly on the leverage chart, seeing where our targets are. And they're just about all hit, which I'll show you here in just a little bit. So is this the bottom of the dip? What are the strategies for buying dips? Let's get into it. Let me show you the charts on the news. I'll show you what I'm looking at. We start here looking at the current Dogecoin chart. We're just over 19 cents. And last night, Dogecoin actually dipped into the 1890s here on the dip. And the question is, of course, is Dogecoin going to dip back down there? Is it going to go lower? So we're going to be talking about that in just a minute. Bitcoin did dip below 116.6. This yellow line here is the one we had identified. I'll show you the heat map in just a minute. And Bitcoin has hit that level, of course, flushing out a lot of long leverage trades in that. There's some other reasons too. I mean, we did have Bitcoin hit a new all-time high, just over $123,000 on Monday. That was on Monday morning. So this sell-off, just profit taking, or is there something more at stake there? So with that high and a pullback in Bitcoin, of course, we get pullback in ETH. ETH was enjoying being over $3,000. Now it is under. But with that dip this morning, do we now have recovery happening? And that was the dip, or is this just setting up for another leg down? So all of that is in play as we get into it here. Look, Bitcoin investors locked in $3.5 billion in profits over the past 24 hours. So on this one, all of this selling of Bitcoin, realizing profits, is profit taking. So you get that huge run that Bitcoin had been on, new all-time highs, someone's going to be taking profits. That's trading, right? That's investing, that's trading. Is, oh, you don't sell your Bitcoin, it's going to go so much higher. Well, there's a lot of traders who don't think that way, that are just looking at profits. And even though they could have greater gains later on, they're like, that is a great price. I've hit my price. I've reached my target, whatever it is. So there's that, right? Is like one of the biggest Bitcoin profit-taking days of the year was yesterday. So that's what has happened. We also have the CME gap. So these CME gaps, these happen on the weekends when the trading of stops on Friday and then starts again on Monday. Although Bitcoin is 24/7, but on CME there's you block out the weekend, right? And you end up with these gaps. And these gaps, we've been looking at them before, and they do tend to get filled. So the history shows Bitcoin loves to fill the gaps, and this clean Bitcoin gap was left at 115. So there are some people who really rely on these kinds of things, and they think Bitcoin's going to drop to 115 and fill that CME gap. So that's another piece out there. But I'm more on the liquidations, because this is what the market makers are actually doing, is targeting these long leverage trades. And after Bitcoin hit that high, and profit taking may have started it, the market makers take over and they start taking out huge leverage, hundreds of millions of dollars, and we're all the way down here now at 116s, and there's still a little bit more down here. And these are actually new ones, because they think, well, there's that dip, right? Price goes back up, I'm going to enter a huge long leverage trade, and then what do the market makers do? They just bring the price back down. I think these will get taken out here. So 116.2, 116.1, that's in the cards for Bitcoin. Bitcoin is now, as I'm recording this, spiking up a little to over 117, but I still think we could see 116.2, 116.1 right down in here for one last give. And maybe it's the CPI data that's going to come out on Tuesday morning, and that's going to like spook the market or something, and we might have that little dip there. So that's in play as well. Overall, Dogecoin dropped 7%. So 7% pullback. Crypto markets get hit with $675 million in liquidations. So the highlight is here, right? The crypto market may still be in a long-term uptrend, but yesterday's liquidation bloodbath is a clear reminder that momentum can disappear just as fast as it arrives. Dogecoin took the hardest hit this time, but across the board, traders are being forced to reevaluate their risk exposure. So on this, and we've always said, right, Dogecoin outperforms Bitcoin in the green, but when we have the red days, Dogecoin drops harder, and here it is again. This is how Dogecoin trades. If you can't handle the volatility, you shouldn't be trading Dogecoin. And if you're going to complain about Dogecoin, right, which we get a lot, especially in the live stream, I'm just, if you're going to complain about it, it's just like, then why did you buy it in the first place? Dogecoin is more volatile on the upside and on the downside, and so it dropped harder. That is the way it is. But yes, the crypto market is a brutal reminder of what happens when euphoria runs ahead of the fundamentals. So a sharp round of profit taking and that leverage, liquidation events, the biggest one since April, and Doge ended up taking the brunt of it because the risk off, right, means Doge is going to drop harder. And here's Trader Allen's. He's like looking at the 1 hour chart and he's like, yep, that was the decline. And now here we are. So Allen just made this. And he's like, well, now Doge is even out. It looks like it's breaking out of that most recent downward trend from when Bitcoin hit its all-time high. Doge followed Bitcoin, dropped at a little bit higher percentage rate than Bitcoin. The 1 hour candle trying to break the resistance trend line. RSI has already shown an uptrend in momentum. Wait for the candle to close. So the RSI looked like it just bottomed out here overnight, and now we're ticking up. So that's on the short term. Now we zoom out and we look at the 4 hour chart, and it's like, well, with that dip there, well, it looks like we've got ourselves a setup of a nice bull flag, which if the whole market turns around and we start going back up, then that bull flag may be pointing to something in 25, 26 cents for the next leg up. So all of that is out there, and we got some, some big bulls like Master Kenobi, right? He's looking at patterns. He's looking at these patterns on these specific days with these specific crossovers. RSI peaks up in early 2024. RSI peaks up here, of course, November 2024. And now if we stay on that same schedule, we're going to see that huge tick up in RSI again coming in the next, well, we're about halfway into this 50-day period. And Kenobi's, he's pointing to like 50-cent Dogecoin in the next 25 days. I think that is a little left translated. I think it's going to be a little bit more of a lag just because of where we are in the summertime now. The summertime lags. We saw that again, 2024 summertime. We saw it back here in 2023 summertime. Same thing happened in 2022 summertime. And this little tick that we just had here up, this little bit of momentum here in July, could just come right back down. So what do you do about buying dips, right? So this is what we've got, is should you buy the Dogecoin dip or wait? The market experienced massive upswing of the last few days. Bitcoin hit a new all-time high. And since we've fallen down into the 116s, of which I think we're still gonna have another little dip. Doge's rally fueled by Bitcoin's latest rise. No specific catalyst for Doge happened. This was on the backs of Bitcoin and euphoria of the whole crypto market, but particularly Bitcoin. Again, banks, institutions, governments, big companies buying Bitcoin for their strategic reserves. But there's a lot of profit taking that did happen. So, but yes, with Bitcoin's rally, increased institutional investments over the last few months. The ETFs continue to see these big inflows. Of course, we're going to see now today what the outflows were yesterday, because I think there were probably a lot of selling of those ETFs that happened. And we've got these global geopolitical tensions. There's a possibility the dip will continue for the next few days. Investors may be booking profits. Bitcoin's price has declined gradually. The original crypto, that's Bitcoin, continues to dip. Dogecoin may also follow a similar trajectory. Buying the dip is a solid investment strategy. However, timing it right can be a challenge. The crypto market has not seen a lot of retail participation this cycle. Retail investors have yet to regain their confidence. Doge and other assets may have succumbed to the lack of retail players. Bitcoin is the only crypto asset that seems to be hitting new peaks this bull run. This makes it a challenge to predict the performance of other cryptocurrencies. The Fed deciding to keep interest rates unchanged. We'll see in a couple weeks, the next FOMC. But I think the retail players are still out. I think that's all going to come in the fall. So we're not there yet. So what do we do now? What do we do with this information? Well, it doesn't have to be an all or nothing strategy. If you're looking to buy Dogecoin, and say you've got $1,000 to invest, and you're looking for those dips, you want to see a big dip, it doesn't have to be all or nothing. You can take one of these red candles and maybe spend $500 of it and keep the other $500 as dry powder, just waiting to see if there is another deeper dip. That is a good strategy, in that you're in the game with at least half of it if the price starts going back up. And then at least you got some of that at that price. But if it goes the other way and we see this continued selling, risk off, for another day, which could happen, and maybe Dogecoin does come down lower into the 18s, maybe into the low 18s, maybe it's a $17.99, you still have some more to use to buy at even a lower price. So that's one strategy. Again, it's the not all or nothing. It's like sort of layering in on dips. So consider that. We'll talk more about that on my next live stream Tuesday afternoon. Be starting at about 4:30, 4:45 time frame, because I've got some late afternoon things I am doing that will delay my typical 4 o'clock East Coast time start. So, but do join in. Hey, let me know in the comments below. What do you think about this? It's a typical Dogecoin trading, right? Higher on the highs, but lower on the lows compared to Bitcoin and other cryptos. And we'll look at a bunch of other cryptos and how they're performing on the live stream as well. We'll get to them all. Just let me know in the chat when you're here for the live stream. But yeah, let me know what you think right now. Are you looking to buy any more? Are you good and you're just waiting for the big bull run to happen? Give the video a like, and if you haven't already, please subscribe to my channel. I appreciate the support. We'll see you next time.